Oh my God, the sky is falling. Welcome to the Equity.Guru Investor Roundtable talking about the market. Ooh, baby. I'm Rob. That's Galen over there in the basement, hiding out down here with me because things are dangerous out there in the real world.
Look at me hiding out. I'm in my bunker.
He's in his gold bunker. It's safe if a bomb hits that thing. And
I hide from no man.
Right?
Yes. And with that, he gets to start off, Chris Perry, and tell us about the market.
Okay, well, look, as you may have noticed, everything out there is downwards. And so that's a thing. Also, you may have noticed that back in January, February, March, we were saying sell everything. I mean, stop trying to trade a downward market. Just get out of everything, sit in cash, and then go delicious as everything gets more and more cheaper for you to buy in later with your fat wad of cash. Why is everything going down? Because the markets have been too frothy for too many years, because the several presidential administrations have seen the markets as the metric that they judge their success by, and have done anything and everything they can to elevate those markets to a place where they didn't make any sense. So all those companies that were being priced in for growth, even though they're losing a ton of money, because you can always go and get cheap money. There's always money in the banana stand. Now there's no cheap money, and those companies are starting to get shredded. Look, man, one rule in the markets that I always look for is I don't give a crap if I miss the top, but I don't want to hit the bottom, right? I want to be there and out before the bottom comes in. If the markets double again and again, and I'm still on the sidelines, I'm okay with that because I'm not losing what I have. You don't want to think to yourself that the profits you've made are just house money. And if it disappears, well, that's not really harming you, because it is. First off, you're going to pay your taxes. And second of all, the guy who has the big wad of cash when the crash comes is the guy who buys everything cheap when the crash is over. You see this every time there's a correction. Like, I'm never going to be the guy that's going to ride you all down to the bottom saying, pretty sure the floor's in now. Like, see the cannabis market for the last 5-6 years, right? You get out when the going's good. You find another thing that's starting its rise. You don't get in chasing the big ones. You certainly don't chase when things are going down. Right now, if the markets went to zero, I know it'd be bad for business, but I'm just waiting for daddy to get his chance to go shopping. You know what it is? It's like, remember back in the old days of the mafia where they would run the numbers, right? People don't know what the numbers were. So you basically say the final stock price of IBM stock, the last two digits out of 100. Anyone who's picked those two digits today wins the booty, right? And the mobsters would sell tickets to grandmas and whatnot every day for a couple of bucks, and then so it was basically an illegal lottery. Crypto is like everybody's running a numbers racket. Like, everybody's running a racket. They're not buying tickets. They're just running the rackets. So there's a racket on this street. There's a racket on that street. There's a racket behind the dry cleaners. Everybody's got their own numbers game, but nobody's buying the tickets anymore, which another way to describe it would be a giant pyramid scheme. Everybody who's buying in has agreed to sit down and shut up if they lose their money. And if they don't sit down and shut up and go, oh, God, how could I ever have known I was going to lose my money? Bitch, please.
Michelle, your turn. We're stepping on you.
Wow, yeah. So there's a lot to talk about, with what's going on with the markets. As Chris mentioned, our work, we've been talking about a topping pattern. On a lot of my work, I've been talking about this head and shoulder pattern on the S&P 500, which we haven't seen since 2007. And we all know what happened there. So let's hope it's not another financial crisis. But with what's coming out, shelter prices are rising because, now if you're a renter, homeowners can basically try to increase rent and, find a way to see who will pay the most, because you're seeing a surging in shelter. And we'll get to why that's happening. Gasoline, energy, food prices all increasing, while people's incomes are rising 0.3%. So, obviously they're not getting ahead. They're in real terms, they're losing money. And what the Fed has to do is raise interest rates, right? Or central banks, right? In order to remove this excess money supply to try to tame inflation. However, that's not going to do everything, because that's not really going to fix the non-monetary inflation, right? The supply chains and all that kind of stuff. Interestingly enough, for that might require some sort of killing of demand, which some people think that's what the Chinese are doing, try to, make people not go out to buy energy and food so they can sort of tame prices, and maybe a slowdown or a recession, right? That's what the Fed is aiming for here. And you're expected to see another 75, I think it says here now, Fed likely to boost interest rates by 75 basis points this week on Wednesday. So, funnily enough, we're talking about markets on the Wednesday, on the 15th is when we have a big Federal Reserve interest rate decision, which will, if it is going to be 3/4, it's going to take interest rates over 2% in the US. And in Canada, we're probably going to follow, and we have this very scary data that came up today. 1 in 4 homeowners say they have to sell their homes in Canada if interest rates rise more than 2%, really. So think of it, if you have a mortgage, for every $100,000 you have in a mortgage, if interest rates go up by 1%, that's $100 added to your mortgage. So if we are going to go above 3%, there's some people's bills are going to be pretty scary, right? $1,500 to $2,000 more that they'll have to pay on their mortgage if they have a variable mortgage rate. And we have a pretty scary number today, actually, on the US exchange. The 10-year yield popped almost 8%. So we're at 3.3%, which is sort of hinting that interest rates have to go higher than this threshold of 3% that the Federal Reserve, said they're going to do. And this could be some scary stuff, because if interest rates go too high, this whole economy has been built sort of on low interest rates, and there's potential.
Let it burn, man. Let it burn. Like,
yeah, exactly.
God,
So
the economy isn't
hurt.
a thing that should only go up, right? There should be measures where things are too frothy and it's going to go down for a while. And if that means that people see their over leveraged investments, the forest has to burn sometimes for new growth to happen. If you're a young person and you don't have $1 million inherited, and you want to get into business, you should be able to find a burnt out shell of a business that went under in a bad economy that you can pick up for pennies on the dollar. That's how you circulate it, right? It's how you bring new people into wealth. As it stands right now, you don't get new people into wealth unless they're playing the three card Monty of crypto. Right? If a laundromat goes under because the guys borrowed too much money in fixing the machines, someone younger than me should be able to come along with a $10,000 and pick up the pieces at auction. You shouldn't just be getting money unendingly from the government saying, sorry, rich person, you made a mistake. It was all on you, but taxpayers will get you out of there so that we don't have any blips on the economy. The economy is for everybody, all right? It's for the young people. It's for the people with no cash. People... Yeah, and they lend in such ways that are irresponsible. And they did the same in 2008 to a smaller extent. And look what happened. Now they're doing it to a much bigger extent because they believe that real estate can never go down. Hey, let's have a moment where real estate drops by half.
Wow.
And see if a few of the baby boomer generation end up selling quickly to young, underleveraged people who don't have, a couple of $1 million left to them by mom and pop, or who didn't buy their damn houses when you could get them by mowing lawns for a summer.
Exactly right. Are we spending any money right now, today, as we speak? That's the question. Next up, you got $7,500 just like in
food and hand-to-hand combat weapons, man.
Yeah.
Is that it? Anybody spend any money? Anybody?
Yeah. So I was going to say that because I think this is still an inflation sort of trade where people are hoping to see inflation get tamed. If this inflation narrative begins to heat up even more, because I think a lot of people thought this inflation would be, the government used the word transitory, but then Janet Yellen 2 weeks ago was like, hey, I made a mistake. So the thing is, if this inflation story keeps to continue, I think people are going to look at hard assets. And historically, for thousands of years, gold and silver have been that inflation hedge. Funnily enough, on Friday when the inflation numbers came up, the dollar spiked But gold and silver also went up. Obviously, they're not doing too well today because of this whole fear and uncertainty. But I think, the metals are going to be where you want to look for the inflation trade. And I think once this fear and uncertainty sort of begins to dissipate and people understand that, oh crap, maybe this inflation is not going to go away as quickly as we thought it would, that money is going to be running into commodities or hard assets, especially gold and silver. But maybe just not right now. I'm just going to, give it a couple of weeks here and see what happens.
To me, this is a great time to be spending your money on hookers and blow if that's your bent, because you're going to get good deals. Like, I kid, but sitting on cash, everyone is always like, oh, inflation eats into your cash. Cool, man. If inflation is at 15% a year, I'm good. Take 15% off my bottom line while everything else is down 60.
Yeah.
I'm good.
Yeah.
Let me play, Uncle Scrooge diving into my vat full of cash. While everyone else out there is saying, but my growth stocks.
Oh, speaking of silver.
No cash out the door. Oh, look at you.
Speaking of Scrooge McDuck up there.
Disagreeing, it's disappearing in your.
I'll toss it in my vault.
Toss it in the vault, buddy. We didn't really give any advice, so I don't really have to throw a disclaimer out there about not listening to us as if it's guaranteed, but whatever we said is not guaranteed. So do your own homework if you are going to invest in this freaking market. By the way, the quote of the day, it belongs to Chris Perry on this episode. I'm just waiting for daddy to have a chance to go shopping, which bumped his earlier one, which was very higgly giggly, which must have been from Australia. What?
Higgly piggly is a scientific term. I'll have you know.
Higgly piggly. There you go. That's it for the market. Holy smokes, people. Hang in there.
Look for bargains.
Yeah.
Look for bargains, and we'll see you in the next Equity Guru Investor Roundtable.
We'll help you find bargains, but look for bargains.
Yeah.